Welcome to the deep dive. Today, we're jumping into Applied Digital, that's APLD. There's a lot of buzz around them, especially with their AI infrastructure contracts.
Right. AI infrastructure is huge right now. Everyone's watching it.
Exactly, and APLD is right in the middle of it. But, it's not always straightforward.
No, definitely not. You see these big headlines, these massive contract wins for APLD, which sound fantastic. But then, well, you look a bit closer and there are some, let's say, financial complexities. It makes getting a clear picture quite a challenge.
Financial complexities. You mentioned that right away. How big a deal are those, especially when you're in such a high-growth, capital-intensive sector like AI?
They're pretty significant. It's something you can't ignore.
Okay, so that's our mission today then. We're going to try and pull out the key insights from the sources we've looked at, focus on APLD's short-term potential, maybe swing and midterm strategies too.
And the sentiment, right? What people are actually saying alongside the hard numbers.
Yes, exactly. We want you listening to really get what's driving this stock, why it matters, and get that grounded perspective beyond just the hype.
Let's do it.
Okay, first up, that huge news. The 15-year contract APLD landed with CoreWeave. I mean, our sources are calling this a game changer.
Oh, yeah. The stock reaction showed that, what was it, up over 50% on August 18th?
That's the one. A massive jump. And that's the kind of thing that gets everyone talking, gets investors excited.
It absolutely is. Instant impact. But what's really interesting, and where our sources add a lot of value, is looking beyond that initial burst.
How so?
Well, they use this thing called rhythm analysis. Think of it like taking the market's pulse, looking for subtle trends beneath the surface noise.
Okay, rhythm analysis. What's it saying about APLD?
It's fascinating, actually. Despite that huge stock surge from the CoreWeave news, the short-term rhythm analysis points towards a descent, or maybe a transition phase.
Wait, descent, even after that 50% jump.
Kind of counterintuitive, right? It suggests that maybe the immediate buying frenzy, the strong demand, might actually be weakening a bit, or at least needs watching carefully. It's a nudge towards caution, even with the good news.
So the surface says go, but the underlying rhythm says, maybe slow down. That's a really important distinction.
Precisely.
So given these mixed signals, what do the sources suggest about actually, getting in? Are there strategic entry points mentioned?
Yes, they do offer some specific levels based on that rhythm analysis. For a swing trade, maybe looking for gains over a few weeks or months, they suggest watching around $13.30.
Okay, $13.30 for a swing. What about longer term?
For a midterm position, aiming for more sustained growth, the suggested level is around $10. But crucially, for the short term, they really stress watching for any short-term line deviation. Basically, a sign the immediate trend is changing before you'd consider jumping in for a quick move. But interestingly, the midterm rhythm itself is described as rising or maintaining.
Okay. So short-term caution, but the potential for longer-term growth is still seen in the rhythm.
Exactly. It suggests a foundation might be building, even if the immediate path is a bit bumpy.
That really highlights this balancing act, doesn't it? Because the contract news is, well, undeniably exciting. Huge potential.
Huge potential, yes.
But it's not just a simple growth story. Our sources point to APLD's market cap, around $3.6 billion, which sounds solid. But then you see recent quarterly results showing net losses over $52 million. And the debt load is pretty hefty, too, nearly $690 million.
Wow, yeah. That's not insignificant.
Right. It's a real counterweight to the contract excitement. It fundamentally challenges that narrative of just immediate, smooth sailing growth.
It really does. It's like, you see this powerful new engine, the CoreWeave contract, but then you realize the car itself has some serious running costs and maybe needs quite a bit of maintenance, that debt, those losses.
It's a good analogy.
And if you layer on the community sentiment, you see that same kind of split. You look at Twitter, stock twits, lots of positive buzzwords, breakthrough, partnership.
Yeah, I saw stock twit sentiment was like 74% bullish.
Exactly. High optimism there. But at the same time, you definitely see the worry words cropping up too. Things like losses, dilution. People are aware of the financial side.
So the crowd is feeling both the excitement and the anxiety.
Pretty much. Which leads to the big risks, right? Things our sources flag like potential regulatory changes, shifts in technology, which happen fast in AI, supply chain issues, and of course that high debt level we just talked about. All serious factors to consider.
So it's definitely a dynamic picture. Lots of moving parts, some pointing up, some flashing warning signs.
That's APLD right now in a nutshell.
Okay, so let's try and pull this together then. To recap for everyone listening, Applied Digital's big CoreWeave contract, 15 years, massive deal. It's clearly fueling major AI infrastructure momentum.
Yep. And that creates potential, right?
Sure.
Short-term buzz, swing trading opportunities our sources highlighted.
But, and this is the crucial but,
it's not the whole picture. That momentum is running alongside some pretty serious financial headwinds, those net losses, the significant debt load. Our rhythm analysis really reinforces this need for, well, caution, risk management, especially if you're thinking mid to long term.
right, it's about looking deeper.
Exactly. Like our sources put it, reading the flow opens the way. Don't just react to the headline news.
That connects to the bigger idea here, doesn't it?
Yeah.
Understanding these different market rhythms, short, swing, midterm, and actually integrating the financial data, the sentiment. It's about being strategic.
Absolutely. It prevents you from just chasing every bit of news. As one source wisely noted, time and capital are easily exhausted when swayed by every market news. You need a plan, a framework.
Food for thought there.
Yeah.
Which brings us to our final question for you, the listener. Something to mull over.
Go for it.
How do you personally weigh something tangible and exciting, like a massive contract win, against a company's underlying financial health, maybe its debt, its losses, and all these different market signals we've discussed? Especially if your goal is strategic engagement, not just reacting. How might you use something like this rhythm analysis idea in processing information yourself?